Good morning. Today is Sunday, August 3rd, 2025, and this is the weekly Bitcoin price forecast, looking at where Bitcoin went in the past week and where it could potentially go in the future. So we ended the month of July on a positive note. So overall, in the month of July, there was an increase of $8,500, and it was an 8% gain. So that's pretty good for the month. Um, Overall, you'll see some months that are like 11%, 14%. And then I think the biggest month that we had was about a 33% gain. Not the biggest month in percentage terms, but absolutely the biggest month in absolute terms back in November, right after the election. But, it's still 8% in a month is still very good. So we started the month off and we are we've completed 2 days, but we're on the third day so far. It's only my third day out here. And prices dropped and cleaned up some of this imbalance. If you can see like this green area, that is an indicator that is marking off the area where prices shot up but has not yet returned to. And you see some areas like this right here to where sometimes it doesn't fully clean up the imbalance. Areas like this, it did. So you saw a run up that we just talked about, that major run up in November. And then for the next several months, it tried to clean up all that imbalance. So you see that pattern happening over and over. So like in February and March of 2024, right after the ETF release, you had a huge run up, and then it spent the next several months coming down to clean up that imbalance, and we see that it got down to that level. So in reality, not that imbalance doesn't always get cleaned up, but it does pull back typically and clean that up. So to see that we've really pretty much done that at this point, I mentioned last week that we could go back down to 110,000. So I think that is still realistic. Maybe less realistic now. I'll show you why I think that on the daily chart. But seeing that we have cleaned up a good chunk of that imbalance, it does show me that we are probably primed up for the next leg up to get to higher prices. So that's pretty much it on the monthly chart. I don't see too much else to really talk about at this point. So we're really kind of keying in and focusing on this area. Last month we had a wick up to 122,000, and then we've just been kind of really a consolidation and a downward consolidation ever since. On the weekly charts, again, we can see the imbalance in different areas. And on the weekly chart, you see that it's pretty much here at this point. So it's touched the top of the previous kind of high. The previous all-time high was 111,000. Then you made the new one of 123. So on the weekly chart, you did see this, and it's come back down to touch that. So you see somewhat of a retest. And now that, again, we have cleaned up this area, it does give it more room to be primed to go back up. So let's put on the drawing to see what we get here. So again, it's Bitcoin moves in a very similar fashion all the time. It's huge run up, bull flag, huge run up, bull flag, huge run up, bull flag, run up, bull flag, so on and so forth. So now that we've really broken past this area, I believe that we'll see a retest of here potentially. And again, that is that's the in my opinion the worst case, because now you have the short-term holder realized price, and I updated that this morning, so it is 106,000 and roughly $70. And you now have this white line that I've been talking about for quite some time, the escape velocity line, as I call it. It runs all the way up here, and now, I mean, you could see a retest here and then, continue on to the upside, 136 or whatever you want to call it. So what we're looking at here is the bottom of this. We're at the bottom of this bull flag. We have cleaned up the imbalance essentially, and now I do think that we are primed for the next leg up. It goes in periods of selling and buying. But now, as time goes by, this short-term holder price it's an area of support since price is above. I believe that we'll creep up and price may come back and down, touch this, and then go there. So daily chart. What do you have on the daily chart? So again, we've had this previous bull flag, and now you have another bull flag where it's just ranged for a while, and then it just dropped down to this area. But the key portion of it is that it has touched the 50-day moving average. You have two areas of support. So you have the bottom of this bull flag, but you also have the 50-day moving average right here that's holding price up. So we see that once it touched it, it slowed down. So you had these big candles, and then this next candle was very slow. Well, again, that's the weekend, but to see that it's bouncing up on a Sunday at this point is promising. That's promising going into next week. So you could see another tap up to 118 and move up to 118. before, maybe a little bit of consolidation, then a breakout. But at this point, I think you're still going to be kind of trapped in this area for quite some time, just going back and forth until you actually do break out to the upside and then, continue on in that direction. At this point too, you have the 100-day moving average that is above it's above the escape velocity line. It's above the short-term holder realized price. So you really do have a ton of support under price as well. So even if it does come back down to worst case scenario, let's say 107, 108, that's still a ton of support just sitting right in this area that will send it back to the upside. 4-hour chart, we can see the actual bull flag a little bit cleaner at this point. So again, it's just a game of ping pong, up and down, and consolidation. Then it goes back up, tries one more time, down, and then it tried 1, 2, 3 to get above, but it couldn't. And now at this point, you have had a cross of the moving averages. So the 50 and the 100, you've had a cross right there, which typically signals some type of downtrend. And the last time you had one of those was late June. So really, you didn't have one for across all of July. And now that we're in August, when did this happen? This happened yesterday. That cross happened. But I think this will be one of those where it just swoops back up, and then you continue on to the upside. So we're below the 200 moving average for the first time since, and this is a 4-hour chart, so it's not as significant, for the first time since late June. But I do expect to see us move back on to that area too. So moving on to economic news. So last week was a very news heavy week. So, Wednesday, July 30th, not too much. You had the FOMC. Okay. Yeah. You had the federal funds rate. So federal funds rate did not move at all. So that's to be expected. I don't think we'll see any type of rate cuts until potentially September, if not October. So there's no decision in August, and the next one will be I think September 17th or something like that. So we've held rates since December of last year. You had rate cuts starting a year ago. The forecast that, they did a big cut here, which was a bigger cut than what was forecasted, and another cut, and then another cut. So 3 rounds of cuts, and then just a hold for essentially a year. Yeah. So, probably about 3/4 of a year at this point. So they've held the U.S. federal funds rate. The other one was the Bank of Japan. I'm always looking at what Japan is doing because they are important. They're going the opposite direction. They're hiking rates. So since January of 2024, they did a rate hike, pause, and then they did another rate hike, and then pause for a while, and then they did another rate hike. So 3 separate hikes, and then they paused for all this time. So things are getting more expensive in Japan, and they are getting quote unquote cheaper in the U.S. So there's this thing called the yen carry trade that I've talked about pretty extensively in the past too. That is very much so affected by these rates, and there's a reason that these rates are being held, because any type of movement at this point is going to exacerbate, kind of the problems that we're seeing already with, the cost of goods, the availability of capital, just in different markets, and with Japan being one of the biggest liquidity providers in the world historically over the last several decades, their interest rate is very important as well. So the only other major one that we saw this week was non-farm employment change, so NFP. They were projecting 106,000, a change of 106,000, up from 14,000, which was just abysmal last time. They really only got 73, so they were off by quite a bit. And you always got to adjust this because COVID threw it off. So going to, let's call it 2020, we see that the labor market has really just fallen off. It's fallen off, and there's just been this movement all the way down to here. So it was July 2025, and now we're below expectations on this one. So the projected was 106, and we came in at 73. So that did rock the market a little bit on Friday morning. And I saw it in the gold markets. I saw it at the NASDAQ, just these different markets that you're able to look at. So as we've seen, the labor market really has stalled out, and it is decreasing. I can't even say stalled out, because stalled out would mean kind of stayed the same. It has really decreased ever since 2020. All those funds from COVID and whatnot, they are no longer present. And now you see what the reality of it. of it is. So anyone who's out there in the job market, I mean, they know how it feels. So I mean, definitely good luck to anyone who is applying for different jobs and whatnot. But it's tough. It's definitely tough out there, which brings less money into the market overall. But it's something to look at for sure, which it does affect the markets. Maybe not Bitcoin to a as large of a degree, but definitely your legacy indexes and assets like the Nasdaq and the S&P and the Dow, as well as gold. Gold saw a major spike after the NFP as well. In this case, because gold is a flight to safety asset, just as Bitcoin is. So these are somewhat expected. I kind of like this meme, so it's the same story every time. Like, hey, I'm an idiot. Why didn't I buy it at 123,000? And then it gets down to 12,000, and it's like, hey, I'm not buying that shit. It just happens every time. So I'm optimistic that we're gonna still see an upward movement for Bitcoin. I'm of the opinion at this point that we will not see these devastating bear markets anymore. But on the flip side of that, I don't think that we're going to see these crazy parabolic runs like we did in the past. Not really to the extent that we have seen them. A lot of that was fueled by the debt cycle, not really the business cycle. So if we print a crazy amount of money, which we have raised the debt ceiling by $5 trillion, and if we do that in a short amount of time, we use up that capital, you could see a big move. But again, that makes the price of everything else more expensive as well. So interesting to see. The other thing that interests me too is the PUL multiplier. So this is basically it's a miner kind of report. It's an indicator that shows like how expensive it is to mine Bitcoin for the miners or whatnot. So it looks at the last 365 days of miner price, and then it compares it to what it is now. So if you're looking at the price, you don't have to know what the specifics of this thing are, but just know that if it gets down to the green area, this is a great time to buy. If it gets down up to the red area, it's like, hey, it's probably time to sell. So we see here, hey, the peak happened here. There was a peak here. There was a peak here, and it got into the red area. There was a peak here, and it got into the red area. It didn't quite hit the red area right here, but it did peak out. So, that is something to look at. So you saw the biggest peak was right here. So this is that run up from up to March of 2024, and then it fell off for a little while. This is also affected by the halving period too. So when the halving happens, you have a steep drop off. So like you had a halving right here, steep drop off. You had where was the halving here? I think the halving was right about here. In November, you had a drop off there, so on and so forth. So like that does change things. It absolutely affects that indicator. So at this point, what I'm seeing is it's not a bad time to buy Bitcoin. It's a lukewarm time. It's not a great time, but it's definitely not a terrible time either. At this point, you can't really say that you're early, but this is something that, hey, if you're willing to hold for the next 10 years, Bitcoin will reach 1 million, and you could argue that it will reach 8 figures as well. Again, just based off the math, and it's only going to get more and more scarce as time goes by. There's no other asset that has that type of capability. So it's interesting. We'll see what that looks like. The other one is like price forecast tools. Like, what are we looking at here? So again, same with the PUL multiplier. It's kind of stayed in this gray middle area. It stayed here, but if we look at what the projections are, 250, the delta top 250, or terminal price 244. The top cap is 553. So at current prices, these are what those projections are. Now that's saying that if it teleported right up here right now, but these are kind of like the caps, and we see that around over time, it did reach this red area. It reached the red area here. Red area, boom, that was the top. That was the top. So you could see it move up, and maybe it doesn't hit the red area anymore. That is a possibility too, and maybe it's no longer in a phase to where it reaches these parabolic runs anymore. But you will see it approach that red cap, or it could just see it continuously move up to the middle. So I would, at this point, see the red line as your top. So it's kind of interesting at this point just to see like what the difference is between price that we would call terminal and kind of what I was saying earlier. I don't think that we'll see like these devastating bear markets that we used to see anymore. Where we see a 70% plunge, and then we come back and we see like these 500, 600% runs in a year. So you may see 100% runs or Bitcoin doubling in a year, but just the crazy. I think in 2017 there was this was from $241 to almost 20,000. That's almost a 100x um, to get to those prices. So adding two extra zeros, you may double from this point on an annual basis. But those things where you see 100x returns or 30x returns or even 10x returns within a 1 year span or 2 year span, I just don't think that's realistic anymore, especially with the price point and the market cap that Bitcoin is at when we're talking about trillions of dollars. The game is just bigger. It's just bigger at this point. So I think that's pretty much all I have to talk about. There's we're in the consolidation period, so there's really not a ton, but you use this time to accumulate, you use this time to look back and kind of formulate a strategy. So other than that, y'all, this has been Chris Talks Crypto. Check out your crypto-based resources on christalkscrypto.com, and I will see y'all on the move. Take care. Bye-bye.